Hello, everybody. Welcome back to the Abundant Wednesday. I'm Shelley Hagan. I'm here with my business partner, Nina McNamara, for the Abundant Investors. And we have with us today a guest, Jesse Bobrowski, which I hope I said that correctly, Jesse, from Calvert Mortgage. And we wanted him to come and talk to us a little bit about, how private and hard money lenders work, and Calvert Mortgage has been doing this for a long time, and so we want to come and share how they can help investors with some hard money financing to help you with your projects. And with that, I'm going to turn it over to Nina.
Thanks, Shelley, and thanks everyone for being here today. Jesse and I just spoke for the first time, and I'm so excited to have hard money lenders come speak, because it's like this unknown area of expertise that we don't really know as investors. We always hear about hard money lenders, but we don't know much about it. And I personally, as soon as I hear hard money lender, I think of that show with Cuba Journey, Show Me the Money. So this is what hard money lenders do. They show you the money. They are able to, help you get a deal done. So what I want to do is find out, what does Jesse do there at Calvert Finance, and see how he can help you guys. So I'm going to take it over to Jess now.
Sure. Well, thanks, Shelley and Nina, for having us on. It's Jesse Bobrowski, so you got it close.
Okay,
Shelley,
thank you.
And Nina, it's Calvert Home Mortgage, so again, close. Okay. And yeah, we are we like to refer to our industry, at least in Canada, as alternative mortgage lending. So what Calvert does specifically, and what our focus is really working with real estate investors on their short-term residential needs. So we're working with investors who buy residential properties. Usually it's 4 units and less. Buy, renovate, and sell, or buy, renovate, rent, and refinance, the BRRRR strategy. Regardless, what we do there is we just really look at an opportunity, understand what the investor's profitability is, and if the investor is indeed going to be profitable after our analysis, then we want to be involved, and we want to support them with our mortgage financing.
Excellent. So where do you guys lend? Do you lend Alberta, Ontario, BC? What kind of cities are you looking at into? What are the options?
So right now we're lending throughout Ontario and Alberta. We are focused on lending in urban centers. Mm-hmm. We define urban centers as it's a bit broad, but 10,000 people within the city limits of. If the town is 50,000 people to 99,000 people, within 10 kilometers of, and if it's a city of 100,000 or more, within 25 kilometers of. The reason we want that is our 40 years of lending to real estate investors has taught us that being in cities and towns really allows the investor to have a better feel for what the market is. There's a lot more data as it relates to comparables, as it relates to the ability for them to sell, as it relates to when they're thinking through what their reno should be. They can find comparables to say, yeah, you should put in the granite, or no, maybe you shouldn't, so on and so forth. And there's just more liquidity for if and when the market turns. Usually the more rural, smaller centers are hit hardest. Mm-hmm. So to protect ourselves and our shareholders, we're focused on more urban centers, is the way that we put it.
Okay, nice. So when you take that into consideration, does the interest rate you charge and the down payment reflect what you are asking from the investor? So
when we're looking at pricing, we look at a number of variables, but really for lending to our flip and BRRRR clients, the most important variable is how much they're going to put down. So we have a really unique product where it allows people in Ontario to buy with as little as $10,000 down.
Wow.
So you could be buying a house in Calgary and you could do $10,000 down. We'll lend you $790,000 plus the fee. In Ontario, it's the same, except for we require $20,000 down. Now, again, it's all predicated on is the project profitable, and do you have the resources and expertise to execute on that? So for the the $800,000 purchase where we're going to be lending $790 as the example, let's say the rental budget is 50 grand and it's going to be worth $950 when it's done. So there's profit in it. They need to show us that they have that $50,000. They need to show us that they have the ability to service our debt during the mortgage. And if they do, we'll lend them the money. And also tell us about the renovations. Who's going to do the renovations? Do you have experience? So we like to work with our borrowers and really provide our expertise to see it be a success. So that really decreases our risk, and in turn increases the likelihood of success of our borrowers. So for that, the pricing would start at 15.5% annualized. That's our most expensive pricing. And the mortgage is always fully open, 6 months. So the bulk of our borrowers are paying out within 5 months. So really, they're paying us just under 7% for that 6 months, or for that 5 months, I should say. And the more money they put down, the lower our rate is. And our least expensive money is 7.9%.
Okay, that's still really good. Like a former mortgage broker, I'm thinking, wow, this is amazing. This is really good for considered, a hard money lender type situation. You mentioned briefly at one point you were underwriting. So what does our investors have to come to the table and give to you? I'm sure there's an application, but what are you looking at? Are you looking at their employment? Are you looking at their credit score? What information do you want from them specifically?
So we're always gathering an application, credit bureau, income information in the form of NOAs, job letters. We always want to see the budget to renovate. We want to see that they have the capital to renovate. And we have this wonderful tool called the Flip Analyzer that I'll share with you guys to share to your audience. And what we like to do is have them work through the purchase price, the down payment, what the renovation cost will be, how long they think the renovation will take, and how long they think it'll take to sell. And then it'll spit out, we have it automated, and it spits out what the profitability is. So anyhow, we like to see app, credit, their plan to renovate, and their funds to do so. On the income side, we're not hung up on GDS, TDS like the banks are. We're more focused on, because we treat each of these deals as kind of a short-term business opportunity. So we like to say, show us the money. Show us that you have the ability to do what you say you're going to do. And if you do that, we're going to lend it to you. And that money could be borrowed. It could be lines of credit, credit cards. Some of our clients do joint venture agreements. So it can come from various sources.
Okay. I'm glad you mentioned joint venture, because some banks, like, you don't even want to breathe JV. Like,
all banks.
Yeah. It's like, whoa. Yeah. But if someone has JV money, you're open to accept that.
Yeah, absolutely. We really take approach, Nina, where we've spent 40 years understanding real estate investors, understanding their needs, understanding what makes them successful, understanding how we can help them with their success. So joint ventures, it's just part of our business.
It's still part of OPM, other people's money, right? So you can only go so far on your own when you need to tap into other resources, right? So exactly. Yep. And what about credit score? Are you looking for a particular credit score? Are you looking for that history?
We're not looking for a specific score. Like, we'll lend on almost any score. When they're really delinquent and there's a lot of derogatory stuff, like they just simply don't pay their creditors, then we're probably going to ask questions and potentially not participate. But usually real estate investors don't have that type of stuff. Usually it's higher limits. Maybe they missed a payment or two, higher usage. That doesn't worry us. So, ideally they have a credit score of above 600. But in the instance they don't, we can ask questions and satisfy ourselves that if it makes sense. But if they don't have rationale and they're just, don't think paying their creditors are an important thing, then we'll we'll say no.
There's bigger issues happening under than that. So yeah, for sure.
Yeah, exactly.
That is great. So how will our readers, or not our readers, but our followers find you? How's the best way to get a hold of you, Jesse?
Best way to get a hold of, there's a few really good ways. We have an amazing website full of tools and resources and all of our contact information. It's at it's chmic.ca, Calvert Home Mortgage Investment Corporation. So chmic.ca. We also are very focused in terms of what we do for, I'll put in air quotes, marketing, is really delivering educational content to real estate investors. I highly recommend following us on Instagram at Calvert Home Mortgage. We are regularly producing a lot of good content, case studies, before and after, tips for flips, economic reports, a whole whack of stuff that I think your audience would really, that it would really resonate with. So please follow us at Calvert Home Mortgage. Really, website and Instagram are the two best ways to get a hold of us. On our website, you'll have all my information. You could submit a deal. Please reach out via email, Jesse, Jesse, at chmic.ca for our flipping program. I can send you, I can send you an email in order to get pre-qualified with us. I'll forward the flip analyzer and answer any other questions you may have. So reach out, we're available. We have a team of all-stars on the underwriting team. We pride ourselves on ensuring we have an amazing customer experience. And one thing that really is important to us with the customer experience is time and getting back on a very timely basis, making decisions quick. So we have great staff who are very responsive and ready to take your questions or calls.
Excellent. Sounds like
Great.
Jesse is an amazing resource to have in your toolkit.
Absolutely.
Awesome. Thank you.
Yes, I've worked with Calvert Home Mortgage for a long time. Probably when I was a mortgage broker and also as a real estate investor. They're so easy to work with, and as an investor, it was quick, and as long as if the deal made sense, the money was there, right, Jesse? It's just, once you go through and analyze it. So don't hesitate to, reach out to Jesse and find out a little bit more. And I was very pleased to when they've expanded into Ontario, because now they're in, multiple markets that can cover that much larger base for us and the people that are listening. So I appreciate your time so much, Jesse. It was a wealth of information. Great to touch base with you again. It's been a while since we've seen each other. And hopefully we'll get you out to one of our live events that Nina and I are going to be doing in the future as well. Love to have you come out and speak again. And again, hopefully we'll get you back here in a little while and talk about some other things that are happening in financing. So thank you so much for your time.
Thank you, ladies, and thanks to your audience for joining us.
Yes, it was great. So with that, I'm going to wish everybody a great, abundant rest of your week and happy investing. And we'll be back again with more to come. Thank you, everybody.